Good morning, my little chickadees. It's what time is it? It's 8:15 here on 12/19. It's Thursday. I actually recorded something yesterday, but I didn't really care for it, and I didn't get back to it, and it was late in the day anyway. Today's PSA, I wanted to talk about why why I pick what I pick. I am trying to hopefully at some point retire. And I've never worked a job that had a pension. Those things really hardly exist anymore unless you work in a union. And I don't know that Social Security is going to exist by the time I get to 65. So I am trying to build my own retirement, basically. Why I would also sort of suggest the same sort of thing for my kids, but maybe not as aggressive, is Jerome Powell just yesterday, the chairman of the Fed, came out and basically said, "Hey, turns out inflation is not as good as we thought. It's going to keep going." Right before the election, they tried to tell you everything was great, and then now that the election is over, they come out with sort of the truth. And well, it's not dire news. Everyone actually knew what was going on. Now they've admitted it. So the interest rates aren't going to get cut as much next year as they promised and that sort of thing. But the point of all of that is that prices are going up, inflation is a thing, salaries aren't keeping up, and I think everyone going forward is going to need supplemental income to be able to live the life that boomers and Gen X did. It's not set up for you to succeed as easily or as quickly. So if you can set up to make a extra $100, $200 a week in a pretty good amount of time, that's just going to ease the transition into being an adult for you. So that's our why. I also kind of wanted to touch on, actually, while I'm on that subject, I had this email from Granite Shares. They're starting new ETFs, new single fund ETFs, and I thought this was an interesting deal here. Yield Boost is launching at a time when the ETF market experiences high levels of demand for options-based income strategies. With interest rates coming down in the U.S., investors are looking to maintain high levels of income and/or replace traditional income streams from asset classes such as bonds with alternative sources like options. Meaning, people are seeing that the interest rates are coming down, which they're apparently not. I think the bonds interest is actually going to go up, but you can still outdo bonds with option class ETFs. So anyway, with that said, Option Shares is fixing to come out with an entire suite of their own Tesla style or Yieldmax style stuff. We'll see what the strategy is and if we want to get into any of that when they actually launch. But I wanted to mention that. Okay. Secondary to that, I wanted to talk about debt. Bad debt, good debt. Um, Buying a bunch of things on credit card that you can't afford is obviously bad debt. No one needs that lecture, I wouldn't think. Buying things you can't afford with other people's money and not being able to pay them back is going to be problematic for you. But borrowing other people's money to buy assets that can pay you and the person back at the same time is good debt. That's how rich people get rich. So, I think if you use it properly, that the margin, which is basically borrowing money from Robinhood to buy more stock, can be good debt, at least in the right context and in the right markets. It's still going to have risk because the market's volatile and all that good stuff. But it can accelerate the growth of a portfolio if you use it properly. A good example of bad debt is this offer that the credit union is offering. Borrow some money to buy Christmas gifts with this terrible interest rate and borrow it for up to 18 months. That's a year and a half, which means next Christmas you'll have only paid 2/3 of the loan that you now need to get another loan for next Christmas. That makes perfect sense. That's absolutely brilliant. This is predatory lending practices is what that is. Okay, real quick, we'll run through the portfolios. There's not a whole lot here. In Kay's account, with Thanksgiving and having to actually work for a living every once in a while, I have not been around this computer for 2 or 3 weeks. You notice there's no videos. So I didn't catch the window to be able to up Misty shares, which is what is paying this week. But that's fine, because now we've got $90 to buy for next week's anyway, so it's going to work out fine. And the portfolio is what, about, with the buying power, it's probably just over 600, just under $600 value. So we put in 5, that's a $100 gain in, I don't know, 2 months, I guess, 3 months. And so 20%. That's not bad. I'm happy with that. And then, like I said, we'll make a decision on buying next Wednesday, probably, assuming I can get to a computer. In B's account, which is just, as a refresher, it's just dripping YMAG. A lot of this is from his Doge that he had when he got here, which was up to about $200 last time I checked in. So it's gone down a little bit, but I also heard that Elon is going to make Starlink payable by crypto, maybe? Or X? Maybe, yeah. Maybe Twitter's going to be payable by, I don't know. So he's going to open up something to be in the crypto economy, and I'm sure that everything is going to get a little boost off of that. So that could be good for you there. Our actual shares up to 500. Our actual account is up to $570. Almost as good as the other one. I'm fine with that. We had this is going to be a low paying week. You saw we can look at the numbers here. And these were the last 2 dividends. 780 was a good one. 480 not so much, and then it's going to be even lower this week. So we can go through the prices real quick. I usually do that earlier. YMAX is paying 13 cents. It's okay. YMAG is down to 6 cents. Terrible. XDTE and QDTE are paying really high. These are probably because they're special dividends at the end of the year. They just have to empty their accounts so that they don't have to pay taxes on profits at the end of the year, so they give it to shareholders. Let us pay the taxes on it. RDTE is probably slightly lower than it's been, but it's still pretty good. I'm fine with that, 2.5% in a week. And surprisingly, the Defiance funds are holding decent dividends, and I think their value's holding okay now. YBTC will not turn weekly until January, I believe, so then we'll start seeing those dividends coming in. And then, let's see, this is Group D week, right? So here's our payments. Misty's paying $3, which is down about $1, I believe, but that's still a ridiculously high payment. It's down to 33 today because the dividend came out. It was like at 36 or 37 yesterday, and it'll probably go back up. This would be a good day to buy if you got money sitting around. Something else that the Oracle was looking at that is pretty interesting is this AIYY that's paying 87 cents this week. That's interesting. The AI stuff is kind of also tied in with the Palantir uh, because AI is being integrated into all the military stuff. So AI and military are both getting a boost because we're fighting everybody in the world. So just interesting, something to watch. Might be something to add to our D group to diversify, maybe out of the Bitcoin a little bit, maybe go half and half, something like that. But anyway, we'll keep an eye on it. We might get something in that. We did the weeklies already. Yeah. What else? Square. I kind of like. It's in everything. Everything like PayPal and buying and the Square things when you buy it. Small businesses with your credit card on the little tablet and all that good stuff. They're in all the digital purchasing stuff. As far as the AMSI and the Apply and those single big stocks like that, I'm kind of just not super on how they keep losing price, and the curve stuff seems to be holding better. It doesn't pay quite as well, but the curve single stocks like this seem to be holding their value better. They don't pay, they're not super ridiculous high payers. Like this is the high one, the Netflix stock, and it's paying, almost 3% this month, which is phenomenal, right? But we're used to getting like 5, 6% a month. So, but they're really great, and I think they're more of a stable, like probably second tier after the Glass Canyon kind of things. But I may start sliding into those in my main portfolio, which I haven't decided whether I'm going to reveal my portfolio to everybody yet, but especially since it's kind of all over the place right now. Anything else that I need to touch on? I think that's it. Christmas is coming up. Uh, maybe no videos for the rest of the year. I'm not sure. I'm going to be at home, not here where I have my computer unless I take it with me. Um, Christmas lesson: don't overspend on Christmas. Everyone will love you whether you give them very expensive crap or homemade stuff, which is what we try to tell everybody when they're kids, and then we never do that. So it is what it is. But don't let the holidays stress you out. It's not a big deal. It's just a time to eat a lot and laugh with family. So do that. Merry Christmas, everybody. Love you all. Talk to you later. Bye.